Disappointing reaction in BNP Paribas stock today as the stock slides 2.8% roughly, despite expectations for better trade in the 1 to 2% plus range for the company. It has reported a miss on third quarter revenues, citing weaker performance in its investment banking and corporate units. However, the French lender posted a beat on net profit, driven by its international financial services division. Let's get out to Joumanna for more from Paris. Joumanna, the stock price is south. What's interesting, if we take a longer picture of the stock price, it has been falling for a couple of years. And I know when Emmanuel Macron was first elected to power, there was a hope that some of the domestic banks would actually get a bit of a pop. It just hasn't lasted for very long in BNP Paribas or any of the French banks.
And I think that is the big question investors are asking, because they clearly want to see something new coming out of BNP Paribas. Just to draw on your point, the stock is down more than 20% year to date, in line with European financials, I should say, as a whole. Let's drill into today's numbers, though. They missed on the revenue. That came in 0.4% lower year on year. Operating expenses were actually up 2%. So again, that raises questions about revenue growth versus expenses growth. A bit of a beat on bottom line, up 4% year on year. But then again, as you mentioned, if you drill into details, it looks as though it was a low quality beat. And one thing I want to talk about specifically here, you mentioned the retail banking side, which of course hasn't seen a lot of love in the last 12 months, namely because of the low interest rate environment and somewhat subdued momentum in the French economy. But I also want to talk about investment banking as well. Now, we know that this is one of the first French banks to start reporting. We know that they have a big equity derivatives exposure. So all eyes are really on BNP to see what type of numbers they would come out with today. On the market side, they're down 8% year on year. This is slightly lower than expectations. FIC business is down 15% year on year. Equities, however, was up 5%, but crucially, I would say less of a performance versus US counterparts, where on average the businesses were up 8% on the equity side of things. So a bit underwhelming on the equity side. Now, I had the chance to sit down with the BNP CFO yesterday, Lars, and we talked about a bunch of things. And one of the things I did ask him was about the recent volatility we're seeing in stock markets. Of course, it has been very volatile in the last couple of weeks. And while it doesn't technically fall into Q3, I asked him whether or not it boded well for Q4. So let's take a listen.
It's a bit too early to say, and we are not a forward guiding bank, because if we give guidance now, we might have to evolve that. But indeed, if you look at the third quarter, at least what you saw in the equity business was up. So that is where you basically saw already in the third quarter, you saw a pickup in the equity activities, which grew by more than 4% in the third quarter. So that is basically paving the road for what we'll see in the fourth quarter.
Now, a couple of other macro phenomena have also happened in the last few months. The first is a big sovereign spread widening in Italy in BTP debt. So can you talk me through some exposure you have there?
Yeah, let's not forget, I mean, in Italy, we do have a presence to BNL, but let's be fair, the market share that we have, you can count it on the fingers of one hand. Yeah. On top of that, we have repositioned our activity to really be focused on the core clients that we have at BNP Paribas. So that means the corporates which are internationally exposed and so forth. And that's basically what we do. And so we basically fund ourselves quasi entirely by our activities. So for us, we don't compensate our balance sheet with bonds and whatever. So it's very equilibrated and there is no major exposure that is at risk.
As you heard, their markets business is continually under pressure here, down 8% year on year. They already announced some cuts in the investment banking side just a few weeks ago. And the outlook certainly looks a little bit more positive, at least from the equities perspective, given that that was the one bright spot of Q3. But again, lots of questions being asked going into Q4. I just want to draw on quickly on some of the macro developments as well. Now, BNP has a little bit of exposure to Turkey. We talked about that yesterday, about 2% of their overall revenues. It's not a big amount, but given the big depreciation we've seen in the Turkish lira, they did book in a 60 million hit from the Turkish lira impact there in the currency. And as you mentioned, their exposure to Italy, you can count it on one hand. But again, it is something people are watching out for, particularly because they have an international retail banking exposure. It isn't just French retail. So again, a lot of questions, and putting it all together, I'm not surprised the stock is down. It was a low quality beat on the bottom line, and investors will certainly want to see more, and not just in the capital accretion side where Tier 1 is up to 11.7%. They'll want to see more of a return on equity on all sides of the business.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.